we can buy properties at a great cost basis below market purchase price. We can do that in the commercial real estate space and still have our properties cash flow positively and have great net operating income, even with higher interest rates. It's just math. And in fact, I would argue it makes for a great opportunity because some less sophisticated investors are scared off by the media headlines. So we're finding incredible opportunities like the current one we're buying. The current seller is losing $6 million in equity by selling to us. We were the only people that had access to this deal. Because of that, the interest rates aren't holding us back because the maths.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Hello, and welcome to another episode of the Secrets to Abundant Living podcast. I am your host, Amy Sylvis, and also the founder and principal of Sylvis Capital. I'm so excited to be with you all again today for a solo episode this week. I just got back from Denver, so I'm wearing the maximum amount of makeup possible because we got home late last night and I'm feeling a little bit sleepy, but that's okay. That's what makeup's for, right? Make us look a little bit more bright-eyed and bushy-tailed. And I'm excited because I didn't want to miss this conversation today, which is going to be about myth busting in investments. So you're really in for a treat today because I talk to dozens and dozens of high net worth, successful individuals every week. And I get to hear not only the information that they have, that they understand, they're very motivated and educated folks, but also some of the myths that they may be hearing from the media, most often, or based on their experience. And the truth of the matter is most of my investors, and maybe you'll resonate with this as well, are successful professionals who spend most of their day on their very successful career or entrepreneurial journey. And they spend time with their family, their children, they enjoy hobbies. And so they're not spending an inordinate amount of time like I am deep in the weeds in this real estate investing game. So I'm honored and privileged to be able to give some data-driven information to myth bust so that you all can make the best decisions for yourself and your family and your investments possible. But before we get started, I would like to invite you to take a moment to rate and review this podcast. As you all know, I love doing this podcast. It's been incredibly rewarding. The feedback that I get is so heartwarming and motivating. Yeah, it's just been an incredible past few months, and I can't wait to continue to do this podcast to add value to you all. But the reality is we must keep growing for this to be successful and to reach our goals of helping as many people as possible live the most abundant life possible, And the way that we do that is one, through sharing the podcast with other people in your network that you feel could benefit from this information. And two, when you rate and review the platforms like Spotify, like Apple Podcasts, like YouTube, share the podcast with more folks and recommend it more often. So please take a moment, give us a rating and a review. It would mean so very much to me. And it will mean a lot to the people that will be exposed to the information on this podcast as well. And it will help them on their abundance journey. So thank you in advance so much for doing that. Let's get down to business. These myths about investing, I'd like to provide some context around why investing matters and why we focus on money and these topics for our solo episodes. And the reason is, of course, if you're new to this podcast, you may not have heard this, but money and investing, particularly hands-off income, is a vehicle to our destination of abundance. Abundance is being able to do what you want, where you want, when you want, with whom you want, for however long you want. And the way to get there very often is to have financial freedom, to be financially free, to be financially independent. And that can come with hands-off income that you don't have to trade your time for. So we focus on money as just the vehicle rather than the destination. Our culture teaches us that the destination needs to be money. And as you can imagine, many people finally get to that destination and realize that they're missing out on incredible relationships with their family and their children, or they're missing out on giving back to their community and having long-lasting impact that leaves a legacy, or enjoying their freedoms, or cultivating health at a level where they're not suffering or they're not limited or trapped in their body. All of these topics I hear from our listeners, from my investors. These are the abundance topics that folks want to learn more about and have more in their life. And money is simply the vehicle. But there's quite a bit of opportunity to talk about that vehicle. So I'm excited to do that today with regards to investing. And we'll have 3 myths that we're going to bust together today to make sure that you have the right information and the accurate information that you need to deploy your capital or to earn that hands-off income in the way that you want. Okay, are you ready? As you know, I have around 1,700 apartment units under management at the time of this recording. And so one of my vehicles for abundance is investing in commercial real estate. And I have the privilege of speaking to dozens and dozens of high net worth, very successful individuals on a weekly basis as we talk about all things investing. And I've heard some common themes, not from everyone, of course, because my investors are really well informed, keep up to date. But I do think there are media sources. I mean, God forbid, right? They're always truthful. They're always giving us the most accurate information. But I do think that the media makes money when they stoke fear and they make it seem like the sky is falling. So there's been some information I've heard floating around from a handful of people that I really think it's worth myth busting with you all today. The first one is interest rates are too high to invest in real estate right now. And it's a good idea to just hold off, wait for interest rates to fall, and then it'll be a good time to invest. Well, I think perhaps we should start off talking about the difference between single family and commercial real estate. Single family, we've talked about this in previous episodes. Single family is valued based on comparables in the market. So I think most people rely on their knowledge of single family real estate and extrapolate it to commercial real estate when investing. We have to be very careful because they are completely different asset classes. What drives valuation and cash flow in apartments, in medical office, in retail, in self-storage, in mobile home parks is completely different than the single family space. These are different asset classes. Commercial real estate is a business that is valued on net operating income. Single family homes, not so much. Most are owner occupied. Yeah, you may rent them out. There may be an NOI, a net operating income there. They simply aren't a business like commercial real estate is. So without getting too far into the weeds, because I don't want you all to be bored, the truth of the matter is single family real estate and the advice that maybe some brokers or some real estate agents are giving to folks about, hey, it's not a great time to buy single family. Wait until interest rates fall. Your monthly mortgage payment will be less and everything will be hunky-dory. Just hold tight. Well, here's how we deal with higher interest rates in the commercial real estate space. We buy at a lower purchase price. It is simply math, and it is possible to do so. So whereas the single family market seems to be kind of locked up, there isn't a lot of transaction of deals. We see that in the commercial real estate space as well, but we also see that we can buy properties at a great, what we call cost basis. So an inexpensive relative to the market, below market purchase price. We can do that in the commercial real estate space and still have our properties cash flow positively and have great net operating income, even with higher interest rates. It's just math. So if we're buying in a great market, for example, currently I'm buying a townhome community in Dallas, great market, recession resistant, economically very diverse, tons of folks moving into that to the Dallas market, lots of household formation, lots of companies relocating to Dallas, very landlord-friendly state and city. So we buy in a great market. And then, of course, we buy at a great cost basis, right? We're not buying at retail prices. We're buying off market from sellers who need to sell, that are often selling below what they purchased the property for. That makes sense in the commercial real estate space, and interest rates are not making it prohibitive to buy and invest. And in fact, I would argue it makes for a great opportunity because some less sophisticated investors, folks that don't understand this space as much, are scared off by the media headlines. So we're finding incredible opportunities. Like the current one we're buying is the current seller is losing $6 million in equity by selling to us. They're in trouble. They're in distress, not because of the economy, but their own business issues. So we're buying at an incredible purchase price. We were the only people that had access to this deal. And because of that, the interest rates aren't holding us back because the maths, as Gen Z says, which I'm not Gen Z, but the numbers add up to where we still have a cash flowing property day one, which is what we're looking for. That is a great investment, and interest rates aren't holding us back. So this kind of headline news of, oh, interest rates are high, no one should buy real estate. I would encourage you to dive deeper in your education and think through, A, what type of real estate are you talking about? Are you talking about single family? Are you talking about commercial real estate? Two different asset classes, apples to oranges. Are you talking about buying at a cost basis that is below market, where when you look at the mortgage that you're going to take out on a property, does that monthly payment still allow you to cash flow the property given the purchase price? For our Dallas project, this Dallas townhomes project, absolutely. Very, very much so. And are you in a market where you suspect that cash flow will continue to be strong because of economic and demographic factors? All of those things need to be taken into consideration. And I take a much more nuanced approach on interest rates. So it is not a complete, halt, red stop sign. It is a, let me understand the type of property I'm purchasing, at what purchase price, in what market. And you can find, just as I have, some really exciting opportunities when other people just are perhaps misinformed or aren't able to understand how to mitigate risk in the market. I hope that makes sense. But again, you guys, my goal here is to make sure that you are sophisticated in the information that you have, and you're not just following what everyone else is doing. Because if you're following what everyone else is doing, you're going to get the same results that everyone else is getting. And I don't think that that's who listens to this podcast. Who listens to this podcast is looking for better. The way we get better is through education. Can you tell I'm excited? Okay. The next myth I want to bust for you all is rents are decreasing. Oh my goodness, rents are decreasing. Oh, it is not a good time to buy commercial real estate. Well, again, let's take a more nuanced approach here. The first thing I would encourage you to consider, and that I consider and sophisticated investors consider in the real estate space, is, well, rents where? Because I'm in Los Angeles, and let me tell you, rents aren't behaving the same as they are in Austin, Texas, as they are in Nashville, Tennessee, as they are in Evansville, Indiana, Huntsville, Alabama, Kansas City, Missouri. These are all completely different markets. So this notion that there is one United States real estate market is simply not true. Every location is different. And that's today, that's looking back 10 years, that's looking back 20 years. So we need to really examine, oh, rents are decreasing. Well, where? In what market? Now, let's just say, so some markets, they're not. They simply are not in the multifamily space. So I would submit to you, go out, do some of that research there. The other thing to understand is, again, we have the control of where we buy our real estate and what type of real estate we buy. There are opportunities to purchase apartment buildings, again, to reference the Dallas townhome opportunity I have right now for my investors, where rents are below market. So are rents decreasing in some areas? Maybe. But are you buying a property where rents are already far below market? Okay, well, then when you're underwriting your property and looking to invest, what are you assuming in terms of the investment performance? Are you assuming that you're going to be able to raise rents far above everything else in the area? Or are you assuming that you're going to be able to raise rents that are still going to be below market rate? So if the rents happen to be declining in the market where you're investing, what are your assumptions in terms of where they will go and how are you underwriting? Again, commercial real estate is a business, and there are projections that are made to predict investment return based on expenses, based on renovations, based on income and raising rent and what all that looks like. So our business plan in the commercial real estate space is called value add, where we take properties from the 1980s, the 1990s, the early 2000s that are in areas where incomes are growing, where rents are growing, but we're going to buy a property that hasn't been renovated and still has 1980s, countertops and flooring and appliances that are outdated. And residents in the area are saying, hey, my job is great. I'm earning great money and I'm willing to pay for nicer units. So we push rents by renovating. And do we necessarily push them to the top of the market? Not always, especially in a market if it's declining. So I'm going into a lot of detail here, but I hope you're understanding that this isn't a single family mentality of, oh, these are rents and we can just kind of get what we get depending upon the market. No. This is a far more nuanced, city by city, area by area, based on the type of property that you're buying and investing in and what the business plan is and our ability to have quite a bit of control over the property that we buy, the current rents in place, where we project to raise the rents to mitigate that risk of falling rents if they are, but often rents are increasing. So I hope that makes sense. But again, this idea of, oh, rents are falling, we shouldn't buy apartments right now. I can't give investment advice. I can only talk about how I think and how I feel and provide education. But in my humble opinion, for my investment dollar, I'm going to miss out on so many great opportunities if I think in that black and white of a way. In fact, there are tremendous opportunities right now that I'm finding that my investors are investing with me on that provide exactly what they're looking for in terms of hands-off income, because we're able to take a more nuanced, researched, and sophisticated approach. And we're not just blindly accepting these myths that the media is putting out. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. We'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. Now, the third myth I want you all to be in the know about is the United States is going into a catastrophic recession. The sky's falling. The Fed waited way too long to cut rates. And why in the world would you invest in real estate right now? We're going to go through some sort of 2008, single family global financial crisis catastrophe. So don't invest right now because of that. Okay. May sound a little extreme, but you'd be surprised. I do hear this and it makes sense, right? The global financial crisis was tough. What we saw in single family homes in some areas of the country, again, it wasn't an equal impact in every market in the United States. But yeah, that was tough for a lot of people. There was fraud. There were those ninja loans. There was a lot. What I want you to understand, especially in the housing industry and commercial housing, is the fact that folks are always going to need a place to live. Now, does that mean that they're all going to pay $4,000 a month for rent? Of course not. But while we're likely not going into an awful recession, we're probably not going into one at all, but let's just say we are. Folks are always going to need housing. And if the economy tanks, which again, it's likely not to, demand for our apartment units will likely go up because folks won't have the salary, maybe, to pay their mortgage or to buy a home. So it's a whole other conversation if home prices will go down. About 75% of people in the United States have an interest rate on their home below 4%, and they see that as an asset, and they're not interested in getting rid of those. So it's a whole other conversation. But on the apartment side, we may see demand higher with apartments if the economy does turn sour. And it's important to look at, I look at multifamily real estate fundamentals. Our country's largest demographic group, the millennials, are choosing to rent instead of to buy, not just because they can't afford to buy, but even when they can afford to buy, they have a preference of renting to have more flexibility, less headache of repairs. And there's a massive shortage of housing in the United States that will take a decade or more, conservatively, to fix. Supplies and labor to build new housing is extremely expensive. When new housing is built, it's often Class A, top of the market, is only really affordable to the top percent of renters. So right now, demand for apartments, and even if the economy goes into a recession, history shows us demand is still robust and our investments will likely perform quite well. Lots of myth busting today, you all. I hope this made sense. I think it does. And I really, again, this isn't investment advice. This is telling you how I think through things. And this is giving you education on data points to look at, to think through as you take a look and examine where you want to deploy your capital to earn that hands-off income. And then, of course, ultimately have abundance in your life. So education is going to be your best friend. Having conversations and being around people who are in this space, who have been successful, that understand what's going on will be your best bet. And I would really encourage you, again, to continue questioning what you're hearing, because as we talked about in previous episodes, the compounding of missed opportunities, of missed returns over a 20-year period of time, 30-year, 40-year period of time can be quite intense. So I think about what if I would have purchased real estate back in 2010 and 2011 and 2012, where would I be sitting over 10 years, 12 years later? I'd be sitting pretty nicely. So I am continuing to invest because I'm not necessarily looking to invest when everyone else is eager to invest. I'm looking to invest when others are too afraid or don't have the information or capacity to invest. And I'm going to scoop up those great opportunities like our townhomes in Dallas that we're purchasing at an extreme discount in an incredible market. That type of opportunity is not available when interest rates are low and everyone is feeling super excited about investing. That type of opportunity is available when others just pay attention to headlines and are too afraid to understand how to invest wisely to preserve their capital. So, not trying to brag, just giving you all perspective on, again, how to build that hands-off income vehicle so you can spend more time traveling, spending more time with your kids, volunteering to help your community, donating money to build a legacy for those in need in your community, strengthening relationships with people that matter to you, and not having to ask your boss for time off and being more in control of your time. All right, y'all, this was an amazing episode. I hope this was helpful. I suspect it is. If you have more questions, reach out. I am very much available on LinkedIn. You can look at the name on how to spell my last name on this episode. I'm Amy Sylvis on LinkedIn. And if you have further questions, let's chat because these are important issues. Even if you're not looking to invest in real estate, it's still a great idea to build that muscle to understand how sophisticated investors think through different parts of the economic cycle and buy great opportunities when others are simply not informed enough, aren't educated enough, or have not the right information and are too scared to invest. All right, y'all. Here is to your abundant life. Have a great week, and I look forward to talking to you on next week's episode. Take care, y'all.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.